all the stocks that are buzzing from the broader end of the market, but time now to dial up on the corporate conversations that we have lined up for you on the show. First up, we've got the management of Interarch Building Solutions, Mr. Arvind Nanda, the managing director of the company, joining us on the show. Mr. Nanda, hi, good morning and good to be speaking with you. Lots to talk about. Let's first start by talking about your latest order win, 58 crore rupees. That's the quantum of your new order win, and this is for a pre-engineered steel building system. Talk to us about this order a little bit more. Give us some more details in terms of what the execution timeline is going to look like, and also give us a sense of what the order pipeline is building up like right
now. Thank you very much. This order is for a manufacturing unit to come up in Tamil Nadu. We are very big in manufacturing industry, and we do a lot of factories for various clients. So this is another win for us in the manufacturing industry. Our total pre-engineered building orders, as we declared last month after our board meeting, was about 1,700 crores. And so we are trying to keep it in that level, 17 to 1,800 crores, which will give us a pipeline of 9 to 10 months going forward. Because the critical part for any pre-engineered building company is the delivery of the order. Or taking the order is much simpler than actually delivering. So you have to deliver according to your capacity. So we feel that going forward with our target of 2,100 crores for the next year, I think an order book of 1,800 crores is very good going forward. So we are very happy with this new order win as well as our order book currently.
So 2,150 to 2,200 crore guidance, revenue guidance for FY27, that is what you just spoke about. But I assume this was given before this order win. So now with additional order win that you've informed the exchanges about, and probably new order wins that could come through over the next few months, would you want to revise your guidance upwards in that case?
I think we will wait, because the guidance doesn't depend on only the orders received, but also the order delivery, like I mentioned. So I think we will be in a better position by the end of second quarter, because our Gujarat plant is going to come into production in early July, as we had predicted. And then the second phase of Gujarat also will come up by August, September, October. It should be coming up. We are trying to prepone it from December. So I think once we have more capacity in place, then it helps us to predict better. Orders is not really an issue right now in the market. But we have to be very careful when we pick up the orders that we can deliver according to the timeline required by the customer. So the larger orders normally have a larger delivery period. But the guidance doesn't change right now with new order wins. These are expected order wins that we have to get. The guidance could change after the Gujarat plant is fully functional, and then we see maybe end of second quarter.
So we'll be watching out for that, Mr. Nanda. On the back of all your operational updates that you've been sharing with us, give us a sense of how do you see the margins shaping? Because we've seen a moderation for FY26 compared to FY25, and you've gotten really close to reaching the 10% mark for 2 years. Give us a sense of when you see your margins crossing 10%, and what would the medium-term guidance for your margins look like?
See, I think the margins should improve, definitely. But at any time, we are also investing into our future. Like if you look at our last year's accounts, I would say nearly 0.4% of EBITDA was lost. 0.4% EBITDA was lost because we had to get a lot of certifications done for our exports, spend money on that. Then due to the new labor code, the auditors insisted that we make a provision just in case what happened, because right now the rules haven't come in. But so we have made that provision also 3 to 4 crores of that. So we have to make provisions. We were getting into heavy structures. So a lot of expenses going into that also, while production will only happen in August onwards. So I think that keeps overlapping a little bit. It is important for us to plan for our future. We are not very happy with the margins that we make, but we are trying to work on both ends to improve our margins as we move up the value chain of getting bigger orders, more complex orders, execute them faster to make better margins, and also work on our internal economies like steel scrap wastage, production wastage, freight cost, purchasing becomes better as we grow bigger. So we are trying to work on all angles. I can assure you and our investors that we are very unhappy with our margin, but it's a struggle and it's an ongoing process to improve it.
The aim be, since you're telling us that you're working to improve your margins, I'm sure there's a target that you've set for yourself when it comes to margins.
Yes, I think we should be aiming for 10% at least going forward. But then, like I said, a lot of things happened. Like last year, suddenly the labor code came up. There had to be some certifications done. Exports will happen more this year onward, not in a very large volume, but they could only start once we have certifications. Then, of course, a lot of export expenses made by people traveling, etc. So these kind of things do happen. So we don't know whether what kind of expenses we'll have to make in exports this year. We have signed a MOU with a Canadian company. So we feel that our expenses could be limited because they'll be doing the selling and imports. But exports could increase. Heavy structure could entail some expenses going and meeting customers and doing some seminars, etc. But 10% is definitely our aim, if not more. That's the aim, immediate aim that we have.
Okay, we'll be watching out for this 10% number on your margins. Mr. Nanda, can you give us a timeline on by when your Gujarat facility is going to be operational? It was aimed for July this year. Can you give us a sense if you're on track?
Yes, it's on track.
Okay.
It'll be in the first half of July. There's a tentative phase 1 production dispatch happening from that plant. And this time we did both the phases, the building and the machinery was more or less ordered together. We are just giving it a gap of 3 to 4 months so that the labor can come in, the workers can come in, operators can come in, get the first line going, and then we immediately start on the second line. So this time we've done it a little differently. So there won't be a very big gap between the first phase and second phase of Gujarat. But first phase is definitely online in the first half of July.
And Mr. Nanda, you also generate significant revenue from export markets. Has there been any impact of West Asia crisis because of logistic problems or increase in logistic costs for that matter?
Well, fortunately or unfortunately, we don't have too much exports right now as a percentage of our, it is picking up. So we have currently orders from Africa, from Myanmar, from Canada, from US. So none of them are affected by the West Asia crisis. In fact, we feel that going forward, we might gain from that in terms that Middle East, which was a very, very big supplier of pre-engineered buildings worldwide, it might be a short-term gain for us in that sense. But there is no issue as far as our export markets are concerned, the West Asia crisis.
Okay, and on that note, Mr. Nanda, because of this crisis, we've seen a lot of momentum in steel prices. Has that impacted you? Have you taken any cost revisions on the back of this development?
Well, I think now it is more or less stable. January, February, March was a little bit of upheaval in that the prices, while they normally always go up in January, February, March, but a little bit more than they went up. Now they are stabilizing and coming down. We took orders based on future increase in price. Many of our customers where we felt that orders were given at an earlier price, there were some delays by the customers. They've given us revisions also. So we've got revisions from the customers to supply at the higher price. Prices today are more stable. Then from January, February, March onwards, the orders that we have taken were always also considering that the prices are up. So overall, I think we'll manage the steel prices very well within this year. Maybe there's a little bit of problem in the first quarter with the second quarter, but overall in the 12-month period, I would say there will be zero effect.
Okay, so no impact of surge in steel prices. But Mr. Nanda, I believe there is some impact of rising receivables on operating cash flow. What is hurting operating cash flow? I believe it has turned negative.
Well, that was the issue in 31st March, our annual accounts, for two reasons I gave earlier also. One was that we have more orders in large orders in the pipeline. They were being executed for large companies, semiconductors, electronics, etc., lithium battery. So there the debtors sometimes become a little larger because they are timeline milestone payments, etc. And because of the rising prices, like you mentioned, we also built up a little bit of the stock. Bought the material a little more in advance than we would normally have done. So both these figures, advance stocks going up, debtors going up because of the larger orders in the execution at 31st March. And also, I think what we had to do a little bit was that, we had to make sure that the prices that we are getting for buying steel, we were getting better prices by paying cash down to the steel suppliers rather than giving them LCs. So that also brought our creditors down. So these three together happened because of steel price increases anticipated. We built up stocks. We paid the suppliers. That's why we didn't have any supply issues like a lot of other companies did have in January, February, March. And of course, larger projects. So these three combined together to have an operational cash negative. But I don't think it's something which will happen again.
So it was a one-off when it comes to operating cash flow. Mr. Nanda, thank you so much for taking your time out and joining us here in ET Now and taking us through the order win and what the outlook for the company for FY27 looks like. Thank you for joining us today.
Thank you very much.
And shifting